How are we doing today, everyone? My name is Scott Lurie with The Hard Money Co., and I am so excited to be here with you today. We are going over one of the top questions we get every single day is it a good deal? People ask me, how do I know if it's a good deal? Well, today we're going to give you an opportunity to ask some questions about deals, understand how we figure out if it's a good deal, resources that we use to figure out if it's a good deal. And if you have any questions, please feel free to interact with us in the chat, and we will answer your question during that process. As I have mentioned before, if you've been on one of these webinars before, this is a free webinar series. I have nothing to sell you. There is no sales pitch to this. This is simply a free webinar. The idea behind it is to give back a little bit and to share some valuable insight as to some real concrete information as to how to be a successful real estate investor. Previous topics we've gone over are the ones next to the red arrows that are YouTube. You can find those on YouTube. Our next will be financial modeling and risk management. Today we are discussing, is it a good deal? The other ones are free for you to catch. If you haven't been able to join us, feel free to jump in and join one of those other already recorded webinars, and love to get your feedback and content. So a little bit about the Hard Money Co. The Hard Money Co. is a hard money lender. We fund your rentals, repairs, deals, dreams, flips. We are a direct hard money lender. My goal is to make sure that we have transparency, urgency, diligence, and hustle in every single deal that is provided to us. And we try to be a great resource to the investors that are out there in the investment community. So a little bit about myself. I started with zero in August of 2003. A little over 20 years ago. I had zero. How many people have zero today? By show of hands in the chat, how many people have never started and never flipped a house yet? How many people have done 3, 5, or 7 deals? All right. We got some zeros. We got some.
Yep, Karen's an experienced investor.
Okay, awesome. So when I started in real estate, I was wholesaling. I wanted to become wealthy. I wanted to create generational cash flow and wealth. And I knew I only could do this in real estate. That's what I knew. I knew that I could only do it in real estate. And so I share a little bit about that, is that I want to encourage you to understand that if today's your August of 2003, or if today's your whatever, you can build a $500 million portfolio over the next 10 years, 20 years, 30 years. It is possible. I did it. I've done it. I'm doing it. I'm actively invested. I give 120% every single day to my real estate portfolio and my lending business. And you too can do it if you're ready to buckle down. Feel free to follow me at Hard Money Scott. You can also communicate and interact with me through Instagram at Hard Money Scott. I'd love to talk to you. So the question of the day, here it is. Is it a good deal? Right? The step-by-step breakdown. Is it a good deal? People ask me this all the time. I've got a good deal. And then they tell me it, and I'm like, where's the good deal? That's not a good deal. And people sometimes get offended when you tell them they don't have a good deal, but they think it's a good deal. And at the end of the day, a good deal is just a numbers game, right? We just play math. We play math and real estate, right? Math and Monopoly. Anyone a fan of Monopoly to go, or Go Monopoly or whatever on the app? I just started playing it. I play with my kid. I don't know. I think it's a fun game. If you haven't played it, come play me. So here's the question, right? Is it a good deal? We're going to understand a step-by-step, understanding a strategy fit, right? What's your strategy and does it fit within your strategy? We're going to understand a little bit about market risk, right? The market is volatile. The market does have risk. And then we're going to discuss, well, how the hell do I even make this deal a good deal and make it happen, right? Well, we're going to talk about those financing options. So, but first, is it a good deal? Period. Is it a good deal? So you're thinking right now, I'm sure, like I think now, oh, I want to go out today and I want to find a good deal for a fix and flip. Because my strategy is fix and flip or buy and hold in a very specific area. And so every day I wake up and I'm saying to myself, is it a good deal? And how do I go find a good deal? Those are my questions, right? Who's calling me with a good deal? How do I know if it's a good deal? And I work through that every single day. So finding the right property. right? Here's the key to the world: finding the right property. All of the money that we make is made when? When do we make all of our money? Anyone got an answer?
When you buy.
When you buy. We make all of our money on the buy. When do you get the money? That stands for money to me. When you sell. But you already have made the money when you buy the property. Okay, so think through this, right? If I'm gonna buy a property, I know that I have to do X, Y, and Z to realize the property. But if I buy it for X and I sell it for Y, in between there is the process, I already know I'm gonna make some money. That's how I look at the world, right? So before you buy it, assesses the distress. Identify the property that's distressed and holds potential value for opportunity, right? So what's a distressed sale, right? Or distressed market, right? How do you come to find one of those, right? Because this to me is the biggest opportunity, right? Distressed. So what is distressed, right? So here's what's distressed to me. The physical asset, right? Physically, the house is a piece of dump, right? The people that have lived there, whether it's the tenants or the owner, have let the house become distressed, right? They haven't fixed the leaking roof and the roof is leaking into the property. They have not done any repairs to the property. The property is in disarray. Grandma Smith, who's been living in the house, has unfortunately ran out of money and she unfortunately has passed away, and we wish her soul a great existence, but she's no longer here, right? So physical property, distressed is one of them, right? What's the other one? Monetary, right? Monetary, right? Sorry for my penmanship. Monetary is a other form of distress. I am financially distressed. I haven't been able to pay my mortgage. I found my house and it's in disrepair. I don't have the money for the repairs. I have something else going on in my life related to finances, right? What's the other one? We have life events, right? The biggest part of life events is unfortunately death. The ultimate, right? Someone has lived in the house, grandma or grandpa has lived in the house, and they no longer live there, and their estate has walked into a house that's in disrepair because they haven't checked on grandma in 30 years and didn't realize that grandma's house was in such disrepair. Unfortunately, she's not here, and they need a life event, which was the death of grandma, to cause for an urgent sale. Please take this off my hands. Those deals are the best deals for us as investors, right? Please take these off my hands. Please take what? My problem and make it your problem. And in exchange for that, you're gonna pay less for a property and you're gonna get better value, right? Okay, so to me, I always look at what are you looking for is finding the right property is always through the distress sale. We're gonna talk about how you find some of those in a minute. High days on market. Where is the biggest platform? What is the biggest platform for sellers motivated to sell their house? Anybody know? These people have already raised their hands and said, I'm selling my house. These people have already done action to sell their house. Where is the biggest market for this?
Arthur says MLS.
Arthur said that? Arthur nailed it. The multiple listing service. Those people have already raised their hands. They've already said, I'm selling my property. And they already have a listing agreement. They want to sell. But what happens is when they either try to go to the market at an unrealistic price, or the property is in disrepair, or a combination of both of those things, you can look for high days on market. Does anyone know what this means? DOM, days on market. It's a searchable field that you can search for that asks the question, how many days on market has a property been available? So I didn't mean to move forward yet because I wanted to talk about a couple other things. So when you look at days on market, I use this as a search method, and then I can mail, I can call, I can knock on door of seller and say, dear seller, or Mr. Seller, Mrs. Seller, you've tried to sell this house for the last 245 days, it hasn't sold. I'm a cash buyer, and I can close on the house in 10 days and make sure your problem goes away. That is a motivator. Person's already raised their hand, they're selling the property, and you are an active buyer ready to buy a property. It's a marriage. Matrimony made on MLS. Then we look at other stuff, neglect signs, outdated interiors, which is harder to see other than through MLS or pictures, but you have an opportunity to see those. Financial issues. This you can see through what we call a list pendants, right? Does everyone know what a list pendants is? Anyone not know what a list pendants is? Raise your hand. Somebody doesn't know what it is. Somebody might know what it is. Okay, a list pendants is a signal from a lender that you have filed, you're filing, an action is forthcoming. It's a notice to all, right? So we file a list pendants first before we file a foreclosure action. That means that if you search for list pendances, you know that a pending or ongoing foreclosure is happening. Great opportunity to determine financial issues. Okay, so once we start finding the houses, what we find is the biggest question people ask is, well, what is it worth? Or, as we properly articulated right here, what is the ARV? So we've described the ARV, and we talk about all of these acronyms in real estate all the time, but an ARV and the acronyms of the industry you need to learn. The ARV stands for the after repaired value. So tell me another industry other than real estate that you can buy a house that's worth $300,000 for $50,000. You can buy something for $50,000 that's worth $300,000. There are very, very few industries that allow for that. I can't think of one. Maybe somebody could argue like antique car industry, but let's put all that aside and just agree with the fact that I think real estate's the only one that allows it to happen. So how do we determine the ARV, right? ARV is a driver specifically in the 1 to 4 families, right? In the single family home, in the single family category, we find them through comparable sales. What has other things sold for that are like in product, like bedrooms, like bathrooms, like type of home, because ranches sell different than colonials and there's different valuations for each of them. But what are the comparable sales that are out there? And people say, well, how do I find those? Well, let's go through the categories and understand how you find them, but also understand what else we're looking for. So when we're finding the ARV, we find comps, which we'll go over in a minute. They have to be within close proximity, so it has to be within 0.25 miles or closer. Sometimes in a very densely populated location, you can go to 1/10 of a mile. So you have to figure out where is good for you and what's best. Don't fool yourself. What happens to us all of the time, is when somebody submits a loan application, they say, well, the property's worth $400,000. I'm like, well, how the hell did you get there? Because the property's worth $280,000. They're like, well, I was close. I'm like, well, you were not close, but you have just fooled your mind. And so you need to find comps that are in close proximity of recent sales. So start your search with 3 months. Then know you can go up to 6 months. And if you can't find enough, extend to 9 and then 12. But what data is better? The fresher the data, the better it is, right? We agree. So if you can pull 3-month data, let's just say you're in Chicago or Milwaukee or Albuquerque or some densely populated area. I don't even know if Albuquerque is densely populated, but let's say another densely populated area. If you can find recent sales that have happened in 3 months, your comparable set is way better, right? You know the market better than 6 months, 9 months, or 12 months. But all of this up to 12 months becomes permissible by industry standard as a acceptable form of a recent sale. Okay? How many people are using basic Zillow? Me. I use Zillow every day, by the way. A lot of Zillow lovers? Any prop streams? Any prop wires? Jerry Norton's new program? Okay. All of these provide such valuable data that it's so important that you learn the search features of each of these, right? Each one of them have the same data pulls, right? So the data that you're getting off of Zillow is only going to be equal to the data you get on PropStream, which should be only equal to the data you get at PropWire. The search features are just different, right? So, excuse me, we're going to use Zillow because we think Zillow, I don't know, Denver thought Zillow looked prettier today than something else, so we went with Zillow. But under Zillow, you can search location, right? You can even put in the address of what you're buying. You can search specific geo-pointed areas. You can search an outline area. You can do anything you want. And then what we're searching for are sold homes, okay? Sold homes. We're not searching for listed homes yet. We're searching for sold homes, all right? And then we are matching what we're buying. So you can select 0 bedroom, 0 baths. You can select 3 bedrooms, 2 baths. You can select 1 bedroom, 1.5 baths. You can select 3 bedrooms, 1 bath, 1 half bath, and a 2-car garage. Attached, detached, colonial, non-colonial. You can get into the search features that are so vast, but the data you're searching for is so good. So I personally use PropWire, and the data I use through that process gets me into as deep of a search of comparable set that I've ever needed. Okay. So what we're then searching for is sold in the last 6 months, and then we're gonna hit apply, okay? Now, when we get into the next one, which Denver has just told us is PropWire, right? You can put the address in as your, does everyone know what this means? That's your target subject property. That's you. That's what you're looking for. Whether you're buying it, evaluating it, trying to evaluate it, figuring it out, that is your property, the subject property. And then on PropWire, they make life so darn easy for you. You have a tab that says comps. Hello, Jerry. Thank you. I'm looking for comps. I'm going to go push comps. Okay, Jerry. Thank you. Now, here's what you can pick. Comps show you sold, right? You can drop that down to sold, active, active with offer, contingent, pending. They have all these different categories. Sold in the last, you pick this number. But here's what I'm going to tell us lazy people, right? You might have to click 3 times. You might have to start with 3 and then 3 months, sold in the last 3 months, and then update to 6 months and then sold in the last 12 months. So yes, you might have to do it 3 times. You might have to also modify within 0.5 of a mile. It's a half a mile. Okay? And then when you run that, this is just the basic stuff. But see where it says more? More, you can start getting into the refined nature of what you're trying to figure out, which is what is this thing worth? What I always want to do is not fool myself, but get the greatest data I can get. And I only do that by refining my search as far down as I can go, where I sometimes irritate myself and get 0 results, right? Nothing's available. And then I start moving around, right? Then I reduce some of the filters, right? We're just filtering. We're just starting with like, I'm looking for X, 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 and X, right? I want X, 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 and X. And then I realize, well, this one doesn't work, right? So we're crossing that out, and this one doesn't work, and I'm left with just this box of comparables, okay? But you're at least trying, right? I'm sorry to tell you, spent 8 more minutes clicking buttons on the internet, okay? So do the extra work. But on PropWire, here's what it shows you, right? This icon, right, matches this icon, right, which shows you that it's what? The subject. Then you can see all of the comps as you start checking them as you run through. This one sold 8/19 of 2024. This one sold, so that one just sold. This one just sold 3 months ago. This one sold almost a year ago. So which comp is better for me? Well, this one sold for $95,000. This one sold for $195,000, and this one's sold for $277,000. So I need to keep digging, but you're seeing the comp set that's getting you to the finish line. So be sure you are digging in to each filter and determining its value to you. Yes?
So Damon asks, is there a cost for PropWire?
Damon asked, is there a cost for PropWire? Jerry, does everyone know Jerry Norton? Jerry is giving this away for free. The cost is 0. Think about this. When I started, in 2003, 20 years ago, we didn't have PropWire. I had to go through MLS. I had to borrow someone's password, which was illegal, but I did it. I had to do all of this crazy stuff. Now I can go onto PropWire for free. $3. Free, nothing, costs you nothing to be a real estate investor. Free, you have all of the data for free. If you wanted to pay $97, which you don't have to get any of this data, this is all free, you can get skip tracing to go and find potential leads. He'll give you he'll give you $97 worth of skip trading, 2,500 skip traced names and phone numbers for $97. I used to spend $30,000 a month trying to find leads. Now I can spend them $97. Anyways, I'm not gonna go back to the old days of what I was spending to try to make money, because now it's a different world. But my point in telling you is it's free, Damon. Was it Damon? It's free. So when you say you can't, I'm gonna tell you you can. When you say you have no money, I'm gonna say good, because you don't need any. It's all here for you. Finding these sites, finding PropWire is free. And all you have to do is sign up. Start saving searches. You can start finding deals. This is just the comp side. But if you go back to one of our other previous webinars, we talk about how to find the deal, and we use PropWire and its search features to find the deal. If you're looking, by the way, at this subject, as a small tangent, I'm sorry, once you click this and you click under the owner, it will tell you the owner's name. How cool is that? Hi, Mr. Smith. I see you own the property at 2557 South 28th Street in Milwaukee. I do. And how did you know that? Well, I clicked owner. So, what do I do with it? What to do with the information, right? What to do with it? So, is it a good deal to wholesale, right? So, how many wholesalers do we have in the audience today? Got a couple? How many fix and flippers do we have? How many buy and holds do we have? And how many aspiring one of the 3 categories do we have?
Lonnie's in here.
Hi, Lonnie.
Alejandro, fix and flip holds.
Fix and flip holds. So everybody starts, not everyone. Everybody aspires to start at wholesaling because it does not require money. I have no money. I don't need any money. I need to buy a good deal that I can sell to Scott, and Scott will pay you a wholesale fee, an assignment fee, and in exchange for that assignment fee, I get the contract. And I get to go fix and flip it. I get to go buy and hold it. Okay. So is it a good deal for wholesale? Wholesaling requires minimum upfront investments. It requires mostly your time, right? You need to go out and figure out how to get on PropWire for free and figure out all these other great things, but there's no need for financing, renovations, property management. You never take title to the property. You are just a wholesaler. You are buying a contract and selling the contract to Scott, who wants to make the profit. So you want to make a single and I want to make a triple. That's the difference. Okay. Do the numbers work? Can you, this is the biggest obstacle, right? Do the numbers work? And so, and it leaves enough profit for you and the end buyer, right? So here's the question you ask yourself. Why do I say, well, let me back up for a minute. Why do I say this is the hardest part? Because it's so easy in the world of the United States world to say, don't need to wholesale it. Because when the seller calls and say, you call them and say, hey, Mr. Smith, do you want to sell your home? And they say, yeah, for $105,000. You say, okay, I'll take it. Well, you didn't even look up any comparables. You just think you're just happy you got a deal. But if the property is worth $110,000, you're never going to wholesale it. You're wasting all your time. You're pissing off Mr. Smith, and nothing good's happening. So you need to go in and do your due diligence. So one of the theses that we have over here is, how hard will you work to make $50,000? If you are a professional, if you want to be a professional, when you call seller and you figured out their name, you figure out what the property's worth on the ARV, you figure out what you have to buy for, right? You have a little formula, right? ARV is 100,000, it needs 20,000 in repairs, right? You need to pay 65%. 65% of that number gets you to your buy number in the call it 45,000. When he tells you that he wants 70,000, you say to him, yes, all you're doing is spinning your tires, right? Because it's not going to work for you, and it's not going to work for a wholesaler or a buyer, and you're just spinning your tires, but you're just so damn happy that you got a contract. My response is, you've just wasted a whole bunch of time. So using the comparables, using the valuation tools that we have, figuring out, is it a good deal to wholesale? Right? Buy low, sell high. Okay, so buying deep, my largest wholesale fee, I think, was $150,000, and my second highest was $75,000. Meaning I made $150,000 and I also made $75,000 buying a home, putting a home under contract, and selling it to another investor. Most wholesalers are earning $7,000 to $10,000 to $15,000 a deal. Do 5 of those a month, you're making 50 grand. There's nothing wrong with that. But make sure you're buying good deals that other investors are making money on, so it's a good deal for you for the next time. So what makes a good wholesale? Or what makes you a good wholesaler? Or what makes you want to be a wholesaler? Well, your risk tolerance is low. You have no money. You need money now. Right? Think about those categories, right? I don't want to own the real estate. I don't even know how to flip a house. I don't know what a contractor is, but I know how to get a contract, right? There are people out there that are just getting contracts and know how to buy low, right? They're good salesmen. Does everyone know a good salesman out there? I know tons of them. Hey, you want $300,000 for your house? I'll give you $120,000, Mr. Seller. I'm not going to take a 120. Well, let me tell you why you should take 120. It'll happen in 5 days. You don't have to do any clean out. You don't have to do any moving. You just get up and leave out of the distressed property and I'll take over. Oh, really? Okay, deal. Your capital's tied up. And some people say, I just need money. I want just to pay the assignment fee. So the question I always say is, well, you're doing that. Are you hitting the home runs? Right? Are you hitting the home runs, or are you just looking for the singles? Because the home run on these deals could be not the wholesale, but what makes a good wholesale is, are you passing on the home runs to someone else? Sure, but think through that, because if you're giving up the long profits, why? Is it a good deal for a fix and flip? We saw some fix and flippers in the audience. Thank you for being here. Right? So things to consider. Are there significant profit margins? When we fix and flip a house, we go through hell. Who agrees with that? We go through city inspectors. We go through permitting. We go through non-permitting. We go through neighbors. We go through contractors. We go through over budgets, under budgets, forgot budgets. Who's got these problems? Because I have them every time I flip a house. I got 3 flips going on right now, 2 going on. I don't even know what's happening. Londi's selling one of them for me. Thank you for hopefully selling it. And it's just problems, right? Every day. So, yes, sir.
I have a question.
Yeah.
So from Cristiano, how do you comp when the neighbor you are buying all sold houses are less than one you are buying because no one rehabs any houses yet? Like some neighbors in Milwaukee.
So the question is, how do you buy a house for more than all of the other houses are selling for, because no one's rehabbing the neighborhood? Is that what I'm understanding?
I believe so.
So is that the right question? Did I ask the question right? Because I want to make sure I'm answering the question.
That's how it was typed. Cristiano, do you need?
Cristiano, did my question back to you make sense? Is that the right question?
You just typed how to comp.
So how do you comp in a neighborhood that's not turning right now, or how do you comp in a neighborhood that doesn't have sales or doesn't have after repair value sales?
Ask him to reword the question.
Yeah, okay, Cristiano, can you please reword the question? Or I'm going to go with the question I think you're asking, which is, how do you buy a house in neighborhoods that are not being renovated because you think they're worth more? And the answer is, it's really hard, right? Those are the neighborhoods that are really difficult. Those are the neighborhoods where I would pause and either come back to them once the movement starts with cash buyers getting sales to happen, because you can't create the market. An appraiser is not going to say, well, because you put in a brand new kitchen and countertops and redid this house, it's worth more than the house next door. That doesn't happen, right? Your neighborhood, you have to be able to be part of a valued neighborhood that is moving, right? A house can start at 160, it can go to 170, it can go to 180. Yes. But if you're in a neighborhood that's not being renovated or the values are suppressed, you don't have the opportunity to create the value. It's very, very difficult.
And then we've got another one.
Yep.
Damon, is there an industry standard in southeastern Wisconsin for a wholesale fee?
Is there an industry standard in Wisconsin for a wholesale fee? No. I've seen them all. I participated in them all. Damien, it's a great question you ask, only because I ponder it often. What should be a wholesale fee? And the answer is, how low can you buy a house, right? If I said to you, Damon, I have a house, let's take this thing. I have this pen that's worth $100,000. And we agree it's worth $100,000. Let's just stipulate for that for a minute. And I tell you, Damon, you can buy this pen for $60,000, and you're gonna have to change the ink and clean it and put some polish on it, but then you're gonna be able to sell it for 100 grand, and you say, I'm going to be able to sell it for 100 grand. We agree, okay. I'm talking to myself, so I'm just saying you're agreeing with me, Damon. So thank you for participating in my self-talk. If I find the pen on the street, or I find it under grandma's bed, and I own it for $1 or for $0, and I sell it for $60,000, is that too much? No, that's market. We see fees between $10,000 and $30,000 all the time. We as a lender struggle with some of the ones that are larger. But at the end of the day, if you can buy a deal that you're going to make a profit on, and you're confident in the values, which is the biggest challenge, right? The values. You're not getting sold a bill of goods. Your pretenses aren't that the value is inflated. That number, in theory, should not be considered. So, I hope that answers your question, Damon. So, is it a good deal for a fix and flip? Is there significant profit margins? What is profit margins? Scott, every time I flip a home, want to make no less than $50,000. I don't want to spend my time to make less than 50 grand. So I'm only doing 4, 5, 6 of them a year, and I will do them so long as I believe I can make $50,000. That's my personal feeling. What is your personal feeling? Is there significant profit margin for you? What is it? You might say, I'll do that same thing for $25,000. That's up to you. Is it in an up-and-coming neighborhood? Okay? You can find deals, Damon, who asked that question, or Cristiano, who asked that question. There are neighborhoods that are expanding outwards in our city, in Milwaukee, but in all cities, that give you opportunities to buy a home that you can make better, or neighborhoods that get better, or borders of communities that go from River West to Harambe, or from the south side west out to 43rd Street, or from neighborhoods that keep expanding. You can do that and make sure that you're in the neighborhoods where people want to live and they're willing to pay for it, and the values are comparable. You can create the comp set. Pioneering comparables is the hardest thing to do. I just put in gold countertops for 100 grand. This house is now worth 200 grand. Sorry, that's not how it works. And then the ultimate question that I just alluded to earlier is, are you comfortable with the fix and flip process? How many fix and flippers agree that fixing and flipping homes is a pain in the ass? Me. You. How many? Anybody? Okay. We do it because we make $50,000. So I'll take a pain in the ass in exchange for a $50,000 fee. I'm sure you'll do that too. How hard will you work for the 50 grand? You'll take a few pains in the asses. Yes, sir.
I have a question from Joseph.
Okay.
How do you value homes that have buyer restrictions like foreclosures offered only for owner occupants?
Great question, Joseph. So Joseph's asking a question as municipalities, specifically municipalities that are taking back homes in foreclosure, excuse me, are putting what they call deed restrictions on properties. And in the exchange for the deed restrictions, there is language, if you get into it, that tells you the penalties for violating a deed restriction. I just read one last week. It said, if you violate the deed restriction and do not sell it to an owner-occupant or do not owner-occupy it, because what are the municipalities trying to do? They're trying to make sure that they get home ownership in the communities, right? So if you're a homeowner and you're buying this house, they want you to own the house because you're going to take more care of the house than a landlord who's away. And you're going to take better care of your yard. And you're going to be mindful of your neighborhood. And you're going to be more careful for everything around you. And it's better for the community. So I read a deed restriction last week that said if you do not pay the deed restriction, if you do violate the deed restriction, you can be penalized up to $5,000. So Joseph, your question is, how do you comp them out? Well, the comparable will never show in a comp report, right? Because nobody is going down to the granularity of understanding a deed restriction. We would still look at the neighborhood to determine the values, but you as the investor need to be prepared to read that deed restriction to know what you're buying and your exposure. Some title companies, some, read the deed restrictions and won't let you sell it. Some, most, don't read them, right? So they're flipping houses and they're just saying, here's the deed, and the deed is not, the deed restriction is not showing up on title, and we're moving on. And then it is bestowed upon the municipality to enforce the deed restriction. So, impact, Joseph, to comps, I would say 0. Impact to your business plan, I would say significant. Because you don't know what it is, but it tells you it usually. This one said $5,000. So read. All of that information, by the way, is available on PropStream, and you can buy it for like $5. So $5 in exchange for a $5,000 fee, I'll read it. I'll pay the $5. Or you can walk down to the courthouse and grab it yourself. What makes a good fix and flip? Well, if you're a newer rehabber or a rehabber that likes to be in and out, the manageable repair scope. Make it easy. You want to be in an area where you're going to sell the house where there's high demand, where your DOM is less than, call it 30 days. You want to not be holding this house, right? What happens to a house that sits vacant, gets broken into, the water pipe leaks, some crap happens, and something happens? Margins are huge. Don't be afraid, okay? Don't be afraid to do what? Think about what we're doing here, guys. Don't be afraid to do what? Don't be afraid to make money. Be proud of it. I just flipped a house. I made $132,000. Yes, that's true. I did. I'm happy about it. I'll tell you about it. Margins have to be big. Don't waste your time chasing around 10 grand when you can make 100 grand. Make sure you're buying the right deals. And also, a fix and flip is for someone that just says, you know what? I don't want to be a landlord. I don't want to deal with the tenants, so I'm going to buy a house and sell a house. My first rental came out of a fix and flip in 2005 that I couldn't sell. I didn't want to be a landlord at that point. Today I'm very happy I am a landlord, so it kind of forced me into something I didn't even want to be. Is it a good deal for buy and hold? How many BRRRR strategy lovers do I have in the room today? Me, by the way, me. Any other BRRRRs? Nobody said BRRRR when I was in 2003, by the way. We called it value add real estate. And then some genius came up with BRRRR, who had more acronyms for this acronym-riddled business, and they came up with BRRRR. Does everyone know what BRRRR is? Buy, renovate, rent, refinance, magical one, repeat. Okay, it's an addiction. Is a deal good for a buy and hold, right? Are we looking at comp sets to make sure we're buying and holding, right? So if we're buying holders, we want to make sure that when we're looking at comps, we're also looking at the rental market, the rental demand. Drive the neighborhood. I'm going to buy this house here. Drive the neighborhood. Is it a strong neighborhood? Hey, I saw you have a for rent sign up. How long has this been available for rent? Oh, I just put it up yesterday. Okay, what do you get? How much do I have to pay to rent it? It's a 2-bedroom, and you're going to pay $1,200. Okay, that's a good comp. Hey, Mr. or Mrs. Renter, how much is this house? Well, it's $800, and it's been on the market for 13 months. Why? Well, it's kind of not really updated inside. Okay, you're learning, right? Every phone call gives you an opportunity to learn. Will it cash flow? How do we know if it'll cash flow? Do the math. Does everyone have a pro forma? Does everyone know what a pro forma is? Does everyone do a pro forma every time you're buying, building real estate? If not, you're just opening up the book of guessing games and it doesn't work. If you need a pro forma, hit me up on Instagram. I'll send you mine. Great. It's a little Google sheet or Word Excel document. Okay? But run the pro forma. What's your mortgage? What's your interest? PITI if you're looking for a loan. PITI if you're looking for a loan has to be greater than 1.1 or 1.2. Depends on your DSCR. Does everyone know what that means? If not, ask. And then appreciating markets. There are markets that in 2003 were selling for $50,000 today, and at that time in Milwaukee, and still to this day are doing the same thing. There is no economic stimulus. Nothing's growing. Then there's markets like Harambe or River West or the South Side, some of the South Side. That's just booming. Values are going crazy. Brewers Hill in Milwaukee, Wisconsin is just an example. Started at nothing. And those houses are going for crazy money because there's some economic driver to make it happen. Are you buying in a market that has value? Okay, so what makes a good buy and hold? Your ability to refinance. Are you going to be able to get a comparable, right? We're talking about comparables. Are you going to be able to get ability to refinance through comparables through a refinance? Every time I refinance, I want to get 100%. Oh, that's really good penmanship. I'm actually going to make a little smiley there. I want to get 100% of my money back. Are you getting 100% of your money back? If you're not, then either you're not renting it for the right amount of money, you're not renovating for the right amount of money, you're not generating enough expense reduction, putting it onto the tenant, or you're paying too much. Portfolio focus. How many people own more than 10 units in the room? How many people own no units in the room? Any no uniters? Don't be shy. Okay, anyone over 25 units? This business is a scalable business called a portfolio. You want to define your buy box and say to yourself, it's coming to the new year, you know those things, what are those things called? People do in the New Year's? They make those resolutions that never work, right? But instead of making a resolution on January 1st, make one on November 6th. That you want to buy, I want to add, write this down, add X number of units over 12 months. Because who cares when the 12 months starts? The 12 months starts today. Why does it have to start December 31st or January 1st? It doesn't. It's silly. Okay? I'm right now in a mood.
With the heart rate. I just spoke to the owners.
I'm still in a mood today, right, where I'm adding to my portfolio. I want to add 25 to 30 units over the next year in a very specific geo part of the city of Milwaukee where I live. Where do you want to add and what do you want to do? And that market for me is in the appreciating market where I want to be, which is on the Lower East Side. That's for me. Lower. And then, do you have a property management system? Collecting rent is the most critical path for what we're doing, right? Money in, money out, money in pocket. Okay? What's the question?
So, Damon's going back to wholesaling. Does the wholesaler have to worry about any of the closing costs when the title company does their thing with the purchase agreement?
So the question Damon's asking is, does the wholesaler have to worry about any closing costs when it does its... When the title company closes on the real estate? So Damon, this is all about your contract, right? What are you putting in the contract, right? Because at the end of the day, the wholesaler, well, it's about your contract and then the contract you've put in place with the buyer of your contract, right? So to answer your question, in theory, the answer should be no. You should just do what they call an assignment fee through an assignment of contract, and you should get paid let's just say you're charging $10,000 for your equitable interest in the contract, okay? Let's just say that's the case. You should get a check for $10,000. Now, a buyer, if I'm the buyer of your contract, I'm gonna check to see that you put the closing costs, traditional and customary, on either the seller or the buyer. If they're on the buyer, I might only pay $8,000 for the contract because $2,000 are gonna be closing costs that I don't wanna pay, that you've contractually obligated me to pay because you either wrote a bad contract or that was your salesmanship that you made to get the deal under contract. So you have to figure out what you're doing and learning these contracts. They're only 11 pages long. You can read every word in them and understand them, and if you have questions, let's talk about them. But the contract that you're writing should be, I'm gonna buy your property and or assigns, and then you can assign it through the assignment contract to me. I'll buy it. And I'm gonna buy it for $10,000. So Damon signs the contract, Damon's LLC assigns it to my LLC in exchange for $10,000 at closing. And I pay Damon the $10,000, which goes on the closing statement as Damon's company gets 10 grand. I have to pay the seller $45,000. The seller's paying traditional closing costs, or I'm paying the closing costs. And in exchange for those two items, that's it, right? Now, some people make a lot of mistakes in that space, Damon, so it's a really good question, because what happens is if somebody says, I'm gonna cover all closing costs, including prorations, you're not getting a tax credit. But if they didn't pay their water bill, you're not paying the tax credit and the water bill because it's on the tax bill. Or you're not paying the transfer tax, which is generally a seller's side pay. So look at closing statements, understand what they are. If you have questions, ask. You're asking really good questions, Damon, and I love your curiosity of what you're doing. I can tell you're interested in what's happening in the real estate space and learning from wholesaling that you want to make some money wholesaling. Do it the right way, get educated. It takes 40 hours. That's 1 week of work. You can learn everything in wholesaling in 1 week of work. Go on YouTube, look up Jerry Norton, Flipping Mastery. You'll learn everything you need to know in 40 hours. It's free. The hell, it's free. Okay, another question.
I have a couple. So one from Joseph is going to comment first. I had issues with property management in the past, but it's simply a management company doesn't take care of the asset the way I would. I would like to start doing management myself. Do you know if a broker's license or any kind of certification is required to do it in Wisconsin?
So the state of Wisconsin does require you to lease properties. They want you to have a salesperson's license. I was managing my own property and did not have a salesperson's license and did not have any trouble. I was following all of the applicable laws. But they want you to have a license. If you're starting out managing a few homes on your own, you're 100% right, Joseph. No one manages it like Joseph will. No one manages it like Scott will. No one manages anything like you'll do it. So do it yourself, manage it yourself, but make sure you're paying attention to everything. And there's laws that say you need a license, but it's the least of the worries of the world today. Okay? What was the other question?
Cristiano, you can't find real comps. Will you accept an ARV based on a rent or DSCR valuation?
So what you're asking is, if we can't find real comps, would you use what they call the other side of a sales approach for valuation is called an income approach, right? So an income approach versus sales approach. An income approach, Cristiano uses what they call a cap rate. So a capitalization rate or a cap rate is used mostly in commercial properties where we're taking $150,000 of income or multiple income streams and determining the value based on a cap rate. On single family homes, it's very, very hard to approve a cap rate valuation because the volatility is tremendous. So we would not take it at a lending institution. I don't know any others that will. Most DSCR lenders will require a formal sales approach valuation. I do not know any that would take strictly an income approach valuation. All right. So we were running out of time here. A couple quick ways to pay for it, as we talked about. So is it a good deal for hard money? I'm going to run through this quickly. If it's a short-term project, yes. If you need to close quickly, yes. Usually when you're closing quickly, you're exchanging costs and additional costs in exchange for purchase price. This is how I built my whole portfolio. I had no money. So I would go to someone and say, sell me that house for 40 grand. They're like, 40 grand? I'm like, but I got to pay all these. Okay, fine. And that was buying the house, right? Does it need extensive repairs? Traditional lenders won't allow for it. So that's when the opportunity comes for hard money lenders. And if you have an unconventional borrower profile, right? You don't have a W-2 income. You've had something in your past. As hard money lenders, we generally overlook most of that and look directly into the valuation of the property, which helps you buy deals. I still today, every day use OPM, other people's money. There's nothing wrong with it. It's the best form of source of financing for me. I use it every single day. It's amazing. I encourage you to do the same thing. So here's what we look for, is the property under contract, right? We look for deals. We don't look for ideas. So if the deal's a deal, bring the deal. We do require available capital. You have to have some money at a minimum. If the more experienced you are, the less capital you need. We do look for a detailed scope of work, right? How much work's gonna go into the property, and do you have a clear understanding of what that is? And then your experience level. The more experienced you are, the lower the down payment, the lower the fees, the lower everything. And that's it. So thank you on behalf of the Hard Money Co. I'll take a few more questions if we have any. If you're looking for an application, you can QR code it right here. If you're looking for learning more about financing options. We have any other questions?
Got one from Joseph. Will an evaluation be higher or investment risk be lowered if the source of the rental income is Section 8 from the perspective of the lender? So
the question Joseph asks is would the risk profile or would the risk profile of the acquisition go down if the tenant is a government subsidized program? He referenced specifically Section 8, but there are multiple different distinctions I'm just going to make the question a little broader, and the answer is not really. We look to understand the income on a DSCR loan that would be takeout. They use that same income approach. They don't look at the income as being contractually guaranteed, etc. We're the same way. Those programs do provide some assurity that the property will be maintained because your contract does have inspection provisions. Traditionally with the Section 8 vouchers, there is annual inspections that one has to go through to make sure that the renewal process happens. But to answer your question, Joseph, it doesn't really impact value in a way that would benefit you as a borrower.
And one from Shannon. How do you refinance after a hard money loan for a BRRRR?
How do you refinance out from a hard money loan for a BRRRR strategy? So remember the BRRRR strategy: buy, renovate, rent. Okay, so rent is the key to the DSCR BRRRR strategy, right? They don't really tell that to you because there'd be a lot of acronyms, but DSCR stands for debt service coverage ratio. Okay, so what is that ratio? Traditionally, it's principal and interest over taxes and insurance, which gives you your coverage, which traditionally has to be over 1.0, but most of the time it needs to be 1.2, okay? So long as that math equals it, then you can go to a DSCR lender, and depending on the appraisal, right? So they order in a formal appraisal. So the appraisal and the credit score, those are the two factors in DSCR. So value, credit, you can get, and then term, sorry. So if you wanted a 3-year, a 5-year, a 30-year, a 10-year, a 15-year, they've got all different opportunities. Whatever you're looking for in the DSCR program then equates to your coverage ratios and then what actually ultimately becomes your maximum loan amount. So you have to do two things in a DSCR. You have to get the value through a hard money lender or a private money lender or from grandma. You have to get the value from whatever you're buying it for to its top value. You have to finish it. We just did a webinar with Londi last week. She bought a house for something and it appraised for 250, and she refinanced and got 20 grand. My point of saying that is you have to get the valuation, but you also have to get the income. Okay?
And we got one more. Wilson asks, do you do DS or do you make DSCR loans in your company?
We do not. We refer out DSCR loans. There are a lot of great DSCR lenders out there that are really efficient. If you're looking for some referrals, let us know. We're happy to send them to you. All right, guys. We've come to the end of our 1-hour webinar. We're a little over time. Today was a great conversation with all of you. I appreciate Krishnando, Joseph, Damon, and everybody that's participated today. My name is Scott Lurie with the Hard Money Co. It's been great being with you. We really had a great discussion today talking about exactly how do you comp out houses and how do you find good deals, which they kind of go hand in hand together. It's been a pleasure to be with you, and I hope to see you next time on one of our free webinars. Thanks for being here, and I hope you have a great day.